I won't say what I was going to say.
So Vitaly just said that when this podcast
this is a
goes over an hour. I was going to say that part, not the other part.
All right, go ahead.
That's when he's like, man, I just want to go to bed. And I'm like, Vitaly, I want to do this for the rest of my life. Forget an hour.
Well, Chris wakes up right now, so he's okay staying up all night.
Yeah.
Admit, this is your job, basically. Even though I paid you for Odia, I have no idea what Odia does. Carlos also is a night guy, and I'm the only one who has like a morning gig to get to.
Yeah, one company I don't have any sunken cost fallacy. Odia. I don't have any.
We don't even think about that shit.
This is we actually just pushed it up.
Yo, Chris, me and you ain't trying to double that shit down, right? We've moved on.
This is brand building, I think, in a lot of different ways that will help Odia as well. Just controlling people's attention. Like that's the biggest thing. Just trying to have people actually care about you. It's hard.
Basically, me and Chris paid a lot of money to be on a podcast at night to 300 people. That's what we paid money for.
No, you scratched the lotto ticket and you're hoping I can cash it in. And look, startups take time, man.
Twitch just went to Jason Calacanis. You know, he has an open thing now he's reaching out for people to get money. Jason Calacanis, right? Did you know that?
He's raised like $44 million in his venture fund. Jason Calacanis.
I know, but he was sending out emails. I was like, maybe we should have done that.
Well, Calacanis also invested in Callin, which is his buddy David Sachs's app, which is also kind of dead. So I mean, like, it's
that dead? Is that actually dead?
Bro, it's pretty dead. It's not good. It's not going good.
I mean, that's how venture capital is. Most of the money is going to be, most of the stuff, about 95% of companies will never make it past the second stage of their growth. Like, say, I think, what is it, seed stage? I don't even know what the
seed,
stage
yeah.
is.
I think the problem is, if we were to discuss startups for a second, all of these the best startups started with less money, okay, that we know of. The biggest company started with less money and less people. And all of a sudden, these guys are coming into the office and asking for what?
So that's what I'm saying.
10 million, 20 million, 100
yes,
million. What are they asking
Callin
for?
raised $12 million at a probably 80 million valuation. And like the app had maybe 1,000 users at the time, maybe.
Like, what's the point of that? Like, that's ridiculous. Go grow it organically out, right? But
that's also 2021. 2021 valuations were a mess. You know,
YouTube started by, what was it, two guys before Google bought it? What was it, like two guys or something that started YouTube and just grew it to beyond them, of course, and then they sold it to YouTube. Yeah. We could even talk about Oculus that Meta took over. That was one guy who raised it on Kickstarter.
Yeah, now he raised, I think, 200,000 to 300,000, same as Odia's raised. That's it, and then he sold it for $2 billion.
Palmer Luckey ended up going to. I mean, some people just have this serial entrepreneur thing going with them, and
no, but it's not the money. It's not the money that makes them successful. Okay, they're already on that path. They use the money wisely. I think these other entrepreneurs that you're talking about that fail, they take $50 million for some stupid startup idea and then blow 100%. It. That startup might have worked if it was like 500,000 and it was like two guys just working for a couple of years and growing the audience organically, like the Callin app.
I mean, look at OpenSea. OpenSea raised $300 million at a $13 billion valuation.
Ridiculous amounts of money.
But like the fact that, you know, this is why Silicon Valley collapsed, the bank. I mean, like they were willing to deal with these valuations and give founders loans on these ridiculous valuations. I think it personally takes a couple years and a lot of grit and determination, because like for us, we were growing phenomenally from September to January, and then our traffic got cut off, right? Because one platform banned us. And then now we're left in the desert trying to figure out how to do this. And this is what happens to all startups. Airbnb got banned by Craigslist. Jay Cow's first company got banned by Google. You know, most of his traffic on Mahalo, the company that was doing 10 million in revenue, Google shut it off overnight. And he knew Larry and Sergey. He was pals with those guys. It was called the Panda rule. Vital, you might know about this. The Panda algorithm update in 2011. Jason was making a bunch of articles for search-friendly optimized keywords, because in 2011, SEO was like so easy. They were doing 10 million a year, and then Google did one update, and then his revenue goes to 500,000, and the company dies in a year and a half. And so it's then you have to figure out how to pivot and really how to keep the shit going, and it's just hard trying to figure it out.
Well, this is the problem, trying to depend on other companies for your success too. Like a lot of things piggyback, of course, but it's hard to just depend on one platform. So even YouTube, that's dangerous, because
that is correct.
YouTube changes his mind about you. You're gone. It's over.
We have a special guest on the stream today. I didn't know this person would be joining us. Hey. Who is this, Carlos?
What's up?
Carlos, you're muted. Your mic's not working.
No, he's not muted.
No, he's muted.
He's muted internally.
Oh.
Yeah.
Take off the AirPods. Look what we've got here. Wow.
We don't hear anything.
We don't hear anything, Carlos. One day we need his mic to work. Hold on.
Yeah.
Oh, there he is.
Who's that? Say hi, Amit. Don't touch, no touch.
Nice.
Say hi, Chris. Say hi, Chris.
Hi.
That's
Hi.
Aw.
And then say hi, Vitaly.
Oh, that's so cute.
Wow, she's like really.
That was really
Really
good.
went in on the E.
That, you know, like
Very
there's
nice.
grown-ups who can't say that.
Can you say finance junkies?
Dude, that should totally be like the intro.
Right.
All right, that should be the intro. That should
You
be
gotta
the intro
start them
music.
young. You gotta start them young. Can you say yay Bitcoin? Yay.
Can you say FSD in 2 months?
Okay. Do you like Palantir?
Oh,
There we
Do you
go.
are you
No.
she's like the what is that? The groundhog. So are we heading into a recession? You want to bite? She wants this. Okay.
Oh, I love
Before
those
we
two
do that,
together.
are we going into a recession? Yes or no? What do you think? Yes or no? Recession?
She's smart. She's like, I don't know, man. I
He's
don't
like,
know.
you know,
She
it
gave
really
a
depends on
J-Pow
what the
answer,
Fed
bro.
does.
She gave a J-Pow answer.
Yeah.
What do you think? Are
We
we
I
need
going
an
trust
into
her more than I
recession?
trust Joey Powell.
What do you think? Recession? Yes or no?
What?
Yes,
That's-
she said
She
yes.
said yeah. Yeah. So
Yeah.
we're going into recession.
It's like CNBC commentary. We don't know which way we're going.
It's either that or we get 6 more weeks of winter.
Right.
Okay,
She just saw
we're gonna go.
groundhog.
We're gonna go. I tried. Okay. We're
Yum,
gonna
yum,
go
yum,
invest in some dinner.
Actually, Jay Powell says he's like, we're probably going into a recession, and he raises the rates just to get us there.
Right. He's like, let me help. Okay, you want a cookie? I'll give you
She
one.
loves those Teddy Grahams. Are those chocolate? I love those Teddy Grahams too. Those are my favorite.
Dude, they're like the perfect size. You can eat like a million of them. Here you
Yup, they're the perfect size.
go. You want 2? Okay, you see
Oh,
that?
we got 25
Negotiate.
bucks.
Oh my
Keep
gosh,
up the great
George,
work,
thank you so
guys.
much, man.
Oh,
25.
man.
Vitaly, we got to get dinner this weekend. It's on the super
Wow.
chat. Here
It's
we
on
go.
George.
25 for
Thanks, George.
cookies. You have to say thank you. Say thank you, George. Oh, that's so awesome. Keep up the great work, guys.
That was worth it.
Bravo, bravo,
Thank you,
bravo.
George. It means a lot, man. It means a lot.
Dude, you
Okay,
should
well-
just give her her own channel. Let her
We're
open
gonna-
up toys, and it's over.
It'll grow
You're a
faster
millionaire.
than this
Wow.
one, bro.
Like, yeah, opening up toys and eating Teddy Grahams.
That's
Oh no,
it.
this
That's
it sucks
Honestly,
because
that's
this
it.
is. Are you guys talking about? Oh, we are talking Uber and
Not
the
yet.
other.
We're talking about startups.
Yeah, we're talking about
Startups.
startups now.
Oh, have you gotten to like the other legacy auto earnings?
Not yet, no.
Those-
Well, we're gonna talk about that too. We got a
Yeah,
lot
I
to
really
talk
wanted to get into that.
Talking all about
about.
startups.
Can you make the show today, Carlos, or you got to be with her
I
tonight?
think I get it. Yeah, I'm gonna have to just like do dad duty today. But I wanted
Okay.
to say at least pop on and say what's up because
That's fine. No, we appreciate that, man. Thank you for coming
Yeah, I
on.
appreciate
You know,
it.
no matter
Thanks for
what,
introducing us.
we gotta get on this. She's a little
We gotta
mini.
get on it.
Do you want to sing? Go sing sugar. Sing sugar.
Honestly, she's saying a lot of smart things already.
That's true.
She's her favorite band is System of a Down now.
She's adding value.
Chop suey. Chop suey.
Yeah, yeah.
That's it.
Your mother friend. Sugar.
All right, I do got one question for her before she goes.
Okay, Vitaly has a question.
I have a question. Is Amit's company Odia going down or up?
There we go.
We're going up, baby! Ring that cowbell!
You called it. You called it.
Hold
The
on.
signs are
That's
looking
good luck.
bullish.
There you go.
Okay,
There you go.
There you go. Oh, down.
Oh, down.
Okay,
Sorry.
it's too late.
It's
Up,
You're a
up, up.
flip flopper.
got too much.
You're a little mini Kramer.
Oh man.
Okay.
As soon
All
as
right,
she set
Carlos.
up,
We'll see you,
as
man.
soon as she
Yeah,
set
I'll
up,
catch you guys. I'll catch you
Okay.
guys.
I was gonna
I'll
hook
catch you
hook
guys
up
next one.
something,
Thanks,
but
everybody.
there we go.
Catch you. Bye bye. Thank you. Oh, that
All
was
right.
great. That was awesome.
And that's
Um,
exactly why we do what we do, right? So that we can have time with the kids and build a future, and so we can do more stuff like what just Carlos did.
How many kids you got?
I got none, but I'm working on it. Dude.
There you
Working
go.
on it.
That was my point.
Yeah,
This is why we do what we do. It's for the children.
that's right. That's right.
Anyway, to conclude the startup conversation, I think they are incredibly difficult. It's 1 in a million. You're ultimately betting on the operator, and the platform risk is very real. But the funny thing about getting banned from the platform that was driving all my traffic, we were driving 20,000 page hits a day. Like it was doing well. The irony is that's also the bull case. Like it's so hard to get traffic and attention. And so because there's like 4 or 5 platforms that control all of it, the bull case is if you build the thing that is even slightly able to do something that those can do, the valuation goes insane because everyone, gets onto it immediately. And so for me, if anyone was looking for an update in terms of how I feel about my start of my idea, my conviction grows day by day in terms of the idea. Because I am actually talking to users every day. I'm talking to people, talking to creators in the space, talking to how they understand it. It's the execution of growth that is the hardest part. But conviction is still there, especially with what I'm seeing going on with Spotify. And, they're the biggest competitor, and I don't think they're solving the problem. And so,
well, also you're not pumping it enough. I don't hear you on your multiple.
No, because the answer to this question is very simple. It's like I tried that for 8 months. You pumping it doesn't do much. Like you have to build a sustainable.
You have to say this is sponsored by Odea. Check it out, Odea.
Yeah, but Vitaly, I did like 50 episodes that garnered hundreds of thousands of views, saying that it doesn't convert. Like there has to be a much more unique marketing strategy that we're trying to figure out than, hey, this is sponsored by Odea. People don't care, right? Like you've got to do something a lot more different and technical. I agree with you. It doesn't hurt.
Step 1 is let people know that it exists. So maybe next time, the 10th time when they hear it, they might check it out.
Yeah, that's possible as well. It's I've said it on thousands of videos that I have on my own channel. It's in every description, but it's just like to get people to leave, you got to attack it in a different way. YouTube's not really.
It's like the thing right here, guys. Go on right now, Twitter, retweet this podcast, and hopefully some of them do that, and then they help push us forward, of course, because the audience plays a big part in our growth. So I think you just have to do the same thing, even for 5 seconds. And most people will ignore it, and then 5 people will take it seriously and help you out, and that's how you grow.
Fair. That is fair.
I don't think it's as hard as you're making it, that you need immediately 1 million people to convert because you're a small time operator with a small staff. You don't have a big team. So you can take a little bit longer to make it big as opposed to the Google, whatever I'm saying, like these other the call-in app. You don't 100%. Need 200 million to spend immediately, right?
Yeah. Well, that's fair. That's fair. And again, I did that for a while.
Can you post the Twitter links? I think people are saying I don't see a Twitter link. Why don't
they're in the description. They're in the description.
Well, just post them in the chat too, or somebody. If somebody can help us, one of the moderators.
Kelly is going to be on Thursday, and I think she can speak to the platform risk because she had 50% of her traffic coming from a very well-known company. Not going to say the name of them, and they shut her down like 5 days ago. Like just her business overnight in terms of traffic, and she has a Shopify e-commerce store, and so she had to partner with a new company to get her traffic back. Right, so
that sucks.
The platform Kelly is just they're unbelievably strong in this day and age. Oh, look, she's doing it for us.
Yeah, she's nice. I've seen her do it before. Thanks a lot. Appreciate it.
Okay,
cool.
We want to start with Ford.
Also, not coming on Thursday.
He's coming on Thursday. She'll be on Thursday. She'll be on. I know she'll be on. I have faith.
She's like, I only come Fridays. Oh, okay. Anyway, moving on.
Uber, AMD, or Ford? Or do we want about Chris being another fucking wizard? SMCI up 13% after hours. Did you even see that, Chris? Did you know?
I did.
Well, it's involved in AI, right? That's why it's benefiting.
Yeah. So, okay, I'll give you the rundown really quickly. So SMCI or Supermicro is a much smaller company than I mean, it's not super small anymore, but it's like about $5 billion. But basically they're involved very heavily with all the other manufacturers, like for GPUs and stuff. So I think a lot of people are looking at AI and saying, I want to be part of the AI revolution from a hardware standpoint. So everyone is just throwing their money at, NVIDIA, which is the favorite, of course, and maybe some possible money on AMD and stuff, saying, you know what, if GPUs go like crazy sales, that means that I'll be able to make money. But the valuation is super stretched for NVIDIA. On the other hand, SMCI, which is Supermicro, makes specialized hardware that you put those GPUs in. And they have a lot of proprietary technology that enables that. Plus, they have partnerships with all of the major manufacturers. And they do it just a really bang up job in creating the hardware necessary to make AI happen. So they make AI standalone workstations so people can use for inferencing and modeling. They can also use them for data centers. They have servers, so rack servers that they custom design, manufacture in China, and then import here into US. There was a scandal in 2018 and 19 where some of their suppliers were possibly what's the word? I don't want to say infected, but infected by the Chinese because what happens is some of the hardware that they found that there was actual hardware bugs in the thing that basically allowed the Chinese to remotely control some of the data. It turns out it wasn't anything malicious on their part. It's just one of the manufacturers that they had. So they moved their production out of China to Malaysia and Taiwan. So they're a really good company, very well run, 5.5 billion dollar market cap. If you scroll down a little bit, Amit, if you scroll down, their PE is, I think, very, very cheap at 9 PE. But then again, right now, hardware is usually a little bit more is going to be cheap because everyone's like, it wasn't a concentrated position. But if you
Chris,
look
do you
at
think
their
this run is
financials,
sustainable at all?
yeah. Look at their financials. Look at their growth rate. Scroll down further.
I would have to pull up the actual website. But I think you said they're growing at like over 60% year over year, something like that.
Faster than that.
Here, check this out.
There it is. Yeah.
If you want to check that out.
Yeah.
So I'm just sharing just the Yahoo screen, but it looks like they've been beating. I honestly, I'm not in this, but they're not doing poorly. They're beating earnings, so that's good. They're growing their cash flows, right? Their revenue here.
Yeah, they took a little bit of a hit last quarter. Well, not last quarter, this quarter technically, because what ended up happening was they ended up getting caught on the wrong side of the supply chain issue, which they were able to quickly resolve. Anytime you deal with certain specialized hardware, you're trying to plan for the future. Sometimes supply chains don't work out necessarily the way you want to, and so just for a quarter they had some issues with that, and so they guided for a lower Q1, but today they didn't guide for a lower like entire year. So they maintained their guidance for the year because they literally have so much goddamn demand coming their way. So
it doesn't look like a risky business, but it also doesn't look like this is a great business. The fact that they're keeping their PE so low, I mean, I don't know their history, but yeah, I guess they went in the bull market to 16. So maybe you have a double on your hands coming up.
Yeah. So I think this is, and especially because the trading volume is super low. I've been in this since like the 70s. I bought some in my wife's. I bought some in my wife. Look at the run up. I mean, it looked to me when I looked at, like, I did my research. I looked at the background of it. I said, okay, I want to be in the AI healthcare. I want to be in the AI revolution in terms of hardware, but I don't want to pay the multiples that people are paying for NVIDIA. So
I know what you're saying, but the bear case is this is not a company that has anything proprietary. They're just good at executing, building AI systems for companies that need it, that don't want to do it themselves. They want to go through a third party to do it. So I think I get that you're bullish, but this is slow grower.
That is a very good point to bring up, that their uniqueness is on their execution. So there isn't necessarily a technology moat like some other companies. Like NVIDIA right now has a technology moat in that they own a lot of the patents that deal with AI hardware specifically. But the reason why I didn't go with NVIDIA is because the valuation, as you guys know, seems way overstretched. Whereas this one, the valuation based on just a relative PE basis is cheap, and it's still growing at double digits, which is great. So if you just do like a DCF, you'll see that, hey, there's a way to get it. Not to mention, I don't want to talk about options, but I did a spread.
Let's move on then. We're gonna spend too much time.
Moving on.
Let's bring on Troy's comment. This is the ugliest hour of TV I watch daily. LOL. Y'all could use a pretty face.
Yeah, I'm pretty ugly.
Is Troy offering his services? I don't know.
Oh my goodness, that's brutal.
Okay.
Master Goma says, IDKY, but I'm always enjoying this podcast, listening to you guys discussing everything. Thank you. I appreciate it.
Oh, appreciate that. Thanks, man.
It means the world. All right, let's move on to the stock Chris and Vitaly are bullish on. I'm not as bullish on them. Uber. Loss per share, 8 cents loss versus 9 cents. So they beat on EPS, 8.82 billion versus 8.72 billion, up 7% on the day. Net loss of 157 million compared to 5.9 billion last year. Revenue for the quarter up 29% year over year from the last quarter. And CEO says Uber's off to a strong start. He said the company's global scale also provides it with a significant data advantage over its competitors that will allow Uber to employ AI solutions, there's that fancy term, on the consumer side and the earner side of its business. Any thoughts on Uber earnings?
I mean, it's pretty much exactly what we said last time, right? There's such a huge potential for things that people may not see as clear as day. Like everyone just thinks this is a ride hailing company and that's it. But I'm like, no, they're also controlling a lot of the data streams that people can be using for other uses, like advertising, which is high margin revenue that could be going in to support a business. Also, as their competitors pull back, they're going to be able to grow. So I don't see a world where there's not a need for a company like Uber. And I think they've gotten to the point where they're large enough of a scaled business that if you are a new person trying to do ride hailing, you're not going to succeed because Uber will just smack you down like crazy, and you won't be able to compete. Like once you like, it's like Microsoft, right? Once Microsoft had 90% of the desktop operating what is that thing called, market share, it's really hard to dethrone Microsoft. So I think it's going to be Uber is going to be the same thing, where Uber right now controls a vast majority of the ride hailing market, so the delivery service market, and as their competitors like DoorDash and Lyft go downhill, they'll be able to capitalize and they'll be able to improve their margins. They won't have to give as many discounts. Like right now, I only get Uber Eats when I see a large enough discount, or I can shop alternatively to DoorDash. But if DoorDash were to go out of business now, if I want to get something delivered, Uber's the only game in town. So
The
So are you
problem is,
buying?
Hmm?
Are you
I'm
buying? after
holding.
these
I'm just
earnings?
holding on. I'm just
Yeah.
holding what I have. Yeah.
there's no reason to buy right now, by the way, just because I'm bullish and I think this is like a possible $1 trillion company. I said that before, but this is a long, long way to get there. And so in the interim, it pumps, it gets a little bit overvalued and it comes back down. So I think we're still in this range. I don't think there's any reason to rush into anything. But the reason I think they went up, because there's several. One is clearly Lyft is doing bad. Okay, let's just face it. If you're going to invest in this ride sharing space, logistics, you have Lyft, you have Uber. They're not even the same company, of course, because Uber does so much more. But if Lyft is cutting people and Uber is growing, that shows you have to put your money with Uber. The second thing I think Darius said on his call, I'm reading it. This is a quote. We talked about the number of advertisers who are using our products growing 70% to 345,000 businesses. Does Lyft even have this business? Of course they don't. So this is such a massive business they're growing on the side once again. So any smart person will clearly see the difference between these two companies. That I think Uber is like a no-brainer. I'm not saying, like I said, don't buy now, but it's something to keep an eye out.
Yeah, if for some reason I see a pullback in Uber back to the 20s, I'm definitely a buyer again. Like
Yes.
the shares that I have, I'm just holding on to them. I'm happy with them. I bought them when they were heavily discounted. Could there be a world where we see that heavy discount come back? Yeah, I think so. And if it does, I'll buy it more.
Remember,
but
we talk about,
yeah.
I don't know what your thesis is, Chris. Maybe it's not the same because you invest in a lot of different companies. But my thesis is just buy monopolies. If you can buy 5-6 monopolies in the market right now, whatever they are, you don't have to follow me into them. I'm just saying, find the monopolies. One of those 5 is probably going to do really well in the next decade. And if one of those 5 does really well, that totally smashes and destroys anything you did bad with the other 4. Right?
Right.
Because these are monopolies.
That is fair.
So it's clear. I don't know if it's clear to everybody in the comments, but it is clear to me day and night that Uber is a monopoly. And they're just going to continue growing and no one's going to beat them because their scale is going to make their network cheaper than everybody else's. That's the moat. Their network.
It's also interesting because DoorDash is not a competitor outside of Uber Eats.
That's
so
it.
DoorDash can't mess with the monopoly.
And what is that worth? I'm wondering, what is the market cap? I'm going to look up DoorDash.
DoorDash they've had a bad stock fall this year. They're $61. They are
$23 billion for just a company that serves you food. That's it. That's all they do.
Yeah.
24 billion.
Yeah.
I'm sorry. And
They
Uber
were
is overvalued at 60
$60
billion.
at one point. Okay. Well, speaking of billions, do you guys know the guy who lost $10 billion today?
No. Who lost $10 billion?
Mr. Carl Icahn's wealth has plunged $10 billion today because Hindenburg is claiming that his enterprise, Icahn Enterprise, is valued at $18 billion, operates as a Ponzi-like scheme in order for him to sell shares and get like an external dividend on the shares. Some very complicated analysis they had. Bill Ackman quote tweeted it. And for those that know about Bill Ackman and Carl Icahn's controversy. Bill Ackman said, "It's funny how things go around in circles," seemingly agreeing with the report. Any thoughts on if Hindenburg has this right? They got Square wrong. It looks like they got that objectively wrong. Do you think they have this one right?
I'm not so. I tried to. I'll be straight. I didn't do as much research. I looked at the report very surface level. I was actually really sleepy, so I didn't have too much time to look at it. But you know, this is one of those things that like Wall Street, for all the things that we think of Wall Street guys, especially them, like hedge fund managers and stuff, we think of them as like these gurus who know everything and all the stuff. There's still people with animosity towards each other. So for people that don't know, if you go back to like 2014 time, Bill Ackman,
Do you want to play it live? I have the 3 minutes right here. You can explain it and then I'll play it. Go ahead.
Yeah. So Bill Ackman was like Bill Ackman and Carl Icahn, they hate each other. Now, Bill Ackman, of course, was looking at this one company called Herbalife. It was an MLM, and he absolutely went to town in trying to short that company. He's like, look, this is a fraudulent company. Its entire business model rests on just getting more people to sell the stuff, and it's just a giant Ponzi scheme. And just because Bill Ackman was in the short position, Carl Icahn came in, and he, along with some other hedge fund managers, actually started buying shares of Herbalife, essentially breaking Bill Ackman's back in the trade. And it was really sad to see, because you had one guy like in Carl Icahn who was literally supporting a company who was very fraudulent, but they were using their weight in Wall Street to mess with Bill Ackman. And that's like one of the things that
it's kind of messed up.
It is messed up. The thing is, though, Bill Ackman has made a lot of enemies over the years on Wall Street. Sure. He comes off very pretentious at times, like, and some of the stuff that he does.
But I like the guy. I like him.
I think he's a very intelligent person. He's really good, but he sometimes misses on the core thing, is that you don't want to antagonize people with a lot of money to fuck with you, because they can. And especially if you have a large enough position, they can take the other side of the position and really screw you over. So right now, if you try to short something and someone who's got $1 billion on the other side, they can literally infinitely screw you over. And the entire time you could be losing, you know? So I would say this is where you have to be really neutral with things. It's just, this is how things are. If you guys ever saw Billions, did you ever see that? Like the TV show?
I haven't watched it yet.
Love that show. So you can see like all the dynamics between it. So we think of these people as just like these cold calculating people. That's all they do. They just based all their investments on calculations. And no, sometimes it's like personality shit too. And they don't care about the average shareholder.
Well, once you have all the money in the world, you know, it's your job to fuck with everybody else, isn't it?
Yeah.
That's what they're doing.
I wouldn't.
Is that what you're gonna do when you 20x on Enphase? You're just
I don't need to do that, man. I just want to enjoy my pool. But the Herbalife story, I didn't realize that Carl Icahn was doing that to Bill Ackman. As a side note, I worked on the documentary for Carl Icahn on HBO, so you guys can check that out. I only did a couple of days on it, but it was
I think I watched it. It's from years ago, right?
A few years ago, yeah. So he is a powerful figure. I was hanging out with him that day, like no joke. He was getting, at the end of the day, like his secretary has like a martini ready for him, like right at the end of the day, like 4:30, 5 o'clock. Him and his wife drinking martinis in the office. It's kind of dope.
He's really chill.
Herbalife was definitely an MLM, though. We know that.
Oh yeah, absolutely. That's why I didn't know that Carl Icahn actually got involved, and because it seems like he just wanted to stick it to Bill Ackman, because that was a total MLM. Absolutely, 100%.
Absolutely MLM
scam.
Yes.
Yeah.
Yeah, and you made the documentary, so you definitely know. Like when I watched it, I was like, this is a scam. Like they're picking up these, poor people in urban areas, trying to teach them this stupid business, and it's like it made no sense. But then Carl Ackman, that's why I was like, why would Carl Ackman take the opposite route?
Carl Ackman, you mean Carl?
Sorry, Carl Icahn.
Carl Ackman, his twin brother.
But he did it to hit back against Bill.
That's amazing. But hold on, this is Hindenburg, right? So Hindenburg was only right about one thing. Was it Nikola? Was it Nikola?
Donnie and Nikola, yeah.
I mean, but they've been wrong a lot too, meaning that they're short sellers and they put out shit in the market. So I'm not sure if they're right about Carl Icahn.
I would say I would probably err on Hindenburg side on this one because you guys ever heard the thing? If it's too good to be true, it probably is. One of the things about the Icahn Enterprises is that they had a yield of like 15% year over year. Their share count was just bananas when it was growing. Like if you look at their share count, it's crazy. Yeah.
Look at what's the ticker?
IEP, I think.
IEP.
Yes, correct. It was down, I think, 32% today or 23, some crazy number.
20% today. Yep.
And Herbalife is still
14
public.
billion now.
Yes, Christian, Herbalife is still public, which is insane.
Their forward dividend, by the way, is 16%. It's kind of crazy.
Wow.
Yeah.
Those are
20.
SLG
Actually,
numbers.
right now, these are 20 right now, I think.
Yeah, I can share it if it's better to share.
Yeah, go for it. The other problem is if you look at it from a NAV basis, like a NAV basis for net asset value basis, they're overvalued by a lot.
Why?
Which doesn't typically happen in the, well, that's the thing. It doesn't typically happen in this space. Most of these closed-end funds, they trade at net asset value or at a discount to net asset value. This is trading at 200% premium over net asset value.
Hindenburg said their share count was growing because Carl was taking his dividends in additional shares rather than cash, which was artificially pumping up. That's interesting.
85% of the float is owned by Carl Icahn.
Yes.
The other thing is institutions, no institutions own these guys. Only retail investors are on the other side, like I think the other 15%.
Carl couldn't get his buddies to buy up.
This would be interesting to see the fall of Carl Icahn, you know.
He's like 85 years old now, right? He's 81.
Well, I don't know if he's running this day to day. I think it might be his son.
87, bro.
He was there when this a couple of years ago. He was there.
Yeah.
I don't know if he does just for the cameras, but he was doing work. We were actually filming.
Here's the question. Do you think Bill Ackman will have a chance to out legacy Warren Buffett before Bill Ackman dies? He's 56. Warren Buffett's 92. Warren Buffett, already amazing legacy, probably has some more work to do. Do you think Bill Ackman can catch up to him over the next 40 years?
No, I don't think so.
Why? Why not?
So the way that Buffett has become like I don't want to call him the messiah of the market, but he's at this point, he's gotten so much notoriety because his way of investing is consistent over a long period of time. And when you look at Bill Ackman's been a little bit of a get in the market, get out of the market, try to do activist things. Like you don't see that with Warren Buffett. Warren Buffett is a true investor, whereas Bill Ackman will trade sometimes. Like there are companies where he's actually invested for a long period of time, but Bill Ackman's more of a trader. So when you look at Buffett is someone who looks at a business, buys a business. Ackman is like buys a trade. So that's a big difference. And so I think the chances of Bill Ackman eventually, getting hit like he did with Herbalife, it's more likely to happen. Whereas you won't see that with Warren Buffett.
Well, yeah, Warren Buffett wouldn't do like, I think this company's going down, let me short it for the next 5 years. I don't think they really don't do that. But the reason Ackman will not be Warren Buffett is one main reason, maybe two. Early on, they were able to buy Coca-Cola and See's Candy, and that was all their growth, and also true. Geico. If it wasn't for those things that they bought, they would not be what you know them as right now. But he was the guy who was smart enough to buy it, hold it, get the good deal, and kept going. Because now, like, even the dividends on Coca-Cola make him back exactly more than he put in that first time, I believe.
Isn't that crazy? If you get one thing right, like I'm not gonna lie, if Palantir goes to 100,
that's the one thing you're gonna get wrong.
Right, you know what I'm saying? But like, you don't need to be an expert. Like, Meet Kevin got Enphase and Tesla right in 2020, and he got his notoriety from that, regardless of what else happened, because he got those two right. Those are at least the two big ones that I know. If you get one right, and enough people know that you got that one right, it shapes a career.
That's all it is. If you hold a good business long enough, which I don't think Ackman really does, because I'm not saying he's a trader. He does have businesses he holds for a long time, by the way. I think, what is the Chipotle? It's been there for a while. So he was right on that one, but I don't think he's the guy who holds a business for 30 years.
Well, he fucked up on JCPenney. JCPenney, he brought in, he's the one who tried to do the activist investing, where he tried to bring in this guy from Apple into JCPenney and change around their entire business. So they and he fucked it up bad. And JCPenney ended up, I think, going bankrupt.
Wait, who messed up JCPenney? Buffett?
No, Ackman.
Ackman. Okay.
Yeah.
I think and also the thing is when Warren Buffett buys a business, like we said, Coca-Cola, he's buying something that's a brand that's going to be there, that he expects will be there for a very long time. And you only have to, like I said, do that 3 times, wait 30, 40 years, you'll be fine.
Yeah. No, that's fair. Vitaly, Enphase is down to 150, fell another 5% today. I have not. What'd you say?
I ain't buying that shit.
Yeah, I'm not buying that shit because you said yesterday that Q2 is going to be rough. I'm sure the audience wants to know a little bit about your thoughts. What do you think right now about Enphase?
I could share. You want to share something?
Of course, we know you've been staring at a chart for 5 hours on Enphase. We know you got
I'll share
a lot of money in there. You got to share that.
Even though we have an episode coming up on freelancer finance, I'm already forgetting the name of the channel I'm on. Hold on a second.
Oh, by the way, guys, we launched Finance Junkies clips today. I'm gonna put it's in the description. I'm gonna put it in the chat. If you're not subscribed to that, please make sure to subscribe if you want good old clips from the Finance Junkies. I'll put that there.
So, all right, I'll share this, but this is still a work in progress. So, calm down, people. And for our Discord members on Freelancer Finance, the Patreon members, you get to see some of the stuff. And also our Enphase chat is free, so you can talk about it. And I do post things about it. But
that chat has so many notifications, bro, on Enphase.
There's a lot of people talking about Enphase and Tesla. And we actually talk about NFX a lot now as well. Here, let me share this, though.
Sorry, guys. I work too much. I don't have enough time to keep posting on your guys' stuff.
No, I don't check their Discord either because it's just so much.
You know what? I forgot to tell you. We were going to invite you into as honorary freelancer finance folk. We were going to give you the membership so you can come and post with our group.
I'm already I'm already in it.
And then you can give us the stock trades in mid too. Just don't post it publicly, of course.
Yeah.
Give you $1? I gotta give you $1.
No, because to get there, you have to pay the Patreon to get the membership, right?
But we're giving it to you for free, so don't worry about it.
I'm so thankful for that. That's amazing. That's great.
All right, do you see this?
Yep.
Okay, so I'll share a little bit, and this goes back to 2016, by the way, the growth, just to show you the growth of Enphase, and then I'll go a little bit into a couple of numbers. Why even the reason I'm not DCAing is not because I don't believe in it. It's because I already have a lot of shares. So I'm going to just buy at better opportune moments that I think are happening. But look at the growth of this company. This is only 2016. They've been around since 2009 or so. And I'll look at this right now here. Inverters sold millions. This is annually 3 million. Back to 3 million. All right. 2017, they actually went down 4%. 2018, they were up. This is actually quarter over quarter. I'm sorry. It's showing you. Not year over year. This is quarter over quarter. So don't get confused. I just got confused. Okay, but 2017 to 2018, they were actually down again. All of a sudden, a sporadic growth. Something happened. 2019, people wanted solar panels on their roof. 6 million solar panels. They 2.5x somewhere there. Okay, keep going. Once again, it didn't grow that much in 2020, which is weird, right? But the stock started moving up a little bit. It actually, I think, hit $60 or something before it crashed in 2020. So now we go from just being stagnant, 6 million to 6 million to 10 million. Grew fast. Then it went to 15 million. And this is the massive run up you guys saw. And now we expect sort of stagnant growth, but I still expect it to hit. We don't know. This hasn't happened yet. These are estimates, but quarter 2 is supposed to be a bloodbath. I'm estimating 2% growth, but still, if we even have 2% growth, fine. It might be a bloodbath, might go down again, might hit the 133, 110, whatever, honestly, but whatever it hits, those prices I'm a buyer at. So might be going lower. Who knows? Because if people think the growth is dead, then solar is dead. It's not happening, right? It's over. Right now, I'm estimating 9% growth. So that's actually a way lower estimate compared to Enphase's past if we look through all the quarterly numbers. And the same thing I'm estimating for Q4, okay? And what happens is that we're going to hit around 20 million. This is my assumption. And if I'm wrong, it could be less. Maybe it's stagnant. Maybe it's 15 or 16 million. And this is a year that is stagnant. But I want you to just to pay attention to what has happened here. I went through it fast. And if you go back up and admit, and Chris, stop me at any point, but if you guys were invested 4 or 5 years ago when nobody cared about solar, of course, and it was 0% of the market, they were selling nothing, 3 million, even less. 2010 was nothing. Maybe it was a couple 100,000. It would have stayed flat for you for years too. Okay. Just like Tesla would have stayed flat. And then years of growth happen. And then you're flat again for a couple of years. And then massive growth happens. So we might be flat again for a year or two. Just remember that. But I'm going to show you a little bit lower. But even if we're flat, this is where it's going when solar continues. Eventually, we're going to the tens of millions of microinverters sold. I'm going to go to a different chart that I have here. And I'll bounce back, and stop me at any point, please. Okay.
Yeah, but basically, just so summarize, and then I'll let you continue. Your argument is even if it's flat for a couple of years, because there is still so much penetration left, if by 2025 we get the growth in Q4 versus 2023 Q2, it's still worthy of holding, just given.
So
that
yeah, let's say it's flat this whole year, and I'm wrong about the 9%. It's just going to be 15 million inverters. You got to remember the simple fact is we're in a terrible environment, and now we know that rates are killing adoption of EVs and solars. We know this. Even all autos. We can talk about all autos. The reason the whole auto industry now is tanking is because it's a consumer item, and unfortunately, solar at this point is still considered a consumer item. Like I buy it even though I'm using it as like to offset my energy, but people have to think about that purchase in terms of the monthly payment, right? So if that's the case, then we know we have a year or two of stagnation, possibly, maybe very little growth. And maybe Enphase will suffer along with Tesla. Those companies are going to get hit hard. But what happens after that's done? Are we saying on this podcast or anywhere else that EVs and solar is done for, that 3%, we've reached the peak and that's the top of the mountain? Is this what we're saying? I'm not saying that.
So when I look at solar, I've always been bullish on solar itself as the technology. The only thing is I've always seen like massive competitors come in and kill the profitability of the sector. So basically, you go back to 2010, I was like, man, we really need to transition to a cleaner energy future. Solar is good. I want to look at it, and every time I looked at solar, the one thing I saw was that the Chinese were heavily subsidizing the manufacturers. To be honest with you, I had no idea that you even needed an inverter, right? It's like right now we look at something and we're just like, yeah, on a surface level, this is the product, but then like you have this microinverter in the background. I never heard of microinverters.
I didn't either until I started researching my own solar panels. I was like, who is this company Enphase that keeps coming up? So even when I bought them, I told you I put microinverters Enphase on my solar, on my roof. I never invested in the company. I wasn't thinking that way back, which I should have been, of course. But I was like, no, let me just put on the best product. What makes the most sense? And then I started researching them. So yeah, I had no idea these inverters were there.
I think the biggest benefit that Enphase is going to have is that as the solar panels themselves get cheaper and cheaper and cheaper, as long as these guys are able to maintain a healthy market share, which they currently get a really good market share, and they're able to grow that market share and grow that pie, they'll be able to dominate this business. That's the if I had the biggest bull case, I would say that this company is massively undervalued for the total addressable market that's possible for them. As long as they're able to just keep pumping out those microinverters and keep share of it. Because the other thing is, like, once you have an Enphase system already on your roof, and let's say you want to expand it out, you want to get a new roof, you want to replace those microinverters, you're going to go back to the same manufacturer. You're going to go back to them for service and everything else.
Can I explain you why? There's a technical reason what you're saying is true. If I wanted to expand, this is actually very important. A lot of people don't understand the minutia of this. And you want to go large? You want to kill the screen share just for this little point? There's a very technical reason. If I wanted to expand my solar system right now, let's say add 1 panel, 2 panels, 10 panels. You can't just do that with a solar edge system. I hope you understand.
Yeah.
So the power inverters, you cannot do that. String inverters, you can, but that's a bad technology anyway. That's not going to work for homes. People aren't going to buy that. It's either going to be power optimizers that Solar Edge sells, or microinverters that Enphase sells. And there's other companies we can talk about, but they own shit. And especially in a down market like this, they're totally screwed. Just like the whole car industry besides Tesla is totally screwed. But so that's one reason. The second reason, just the technology itself is better. So anyone who cares about the 25 years of things on their roof, it's just a better technology. As soon as you reason through that it's going to be there for 25, 30 years, and you're not doing it for like a fly by night. You're not like an operator where, I need to put solar in and I'm selling my house and I'm flipping it. I'm doing something like that. That's different. You're just trying to save the most amount of money. But if you put those reasons together, this is a no-brainer, like you're saying, for the future of Enphase. And at 3%, it has nowhere else to go. I mean, like, where do they expect it to go? Back to like selling half the inverters, and we're going down in solar adoption?
I would say interest rates are going to be the biggest positive for them, right? So as interest rates go down again,
yes,
it'll benefit their business, because that makes it, the consumer value proposition becomes better and better. Like I said, one of the biggest challenges, and it's one of the reasons why I'm actually kind of bullish on SLG as well, where I think there are a
Ding,
lot
ding,
of
ding, ding.
business.
We should ring a bell every time he goes changes topic.
I'm just saying that there's a lot of businesses that
now we just need Weight Watchers left.
Weight Watchers left, and we're done.
There are a lot of businesses that are built on having access to cheap capital so that they can do stuff with it. And when you take away that cheap capital, you're going to see the impact of it come down the business, right? So whether you're looking at companies like Enphase, who sell primarily to consumers, who end up buying these solar systems on their roofs and stuff, you know, when you take away that easy access to capital, their business is going to be impacted. These car companies, you take away access to capital, that's what's going to happen. Same thing in real estate right now. They're especially on the commercial side, one of the biggest worries is not necessarily that the value of the assets that they have are low, because some of these Class A buildings are actually very highly coveted, they're occupied, but the cost that they ended up bearing during good times, because they never really considered like, oh my God, the valuation, you know, I'm paying $3 billion for a building, but it's okay because I'm getting a 3% loan on to construct this giant building. Right now, if I have to pay 6, whatever margin of profit that I was getting before is going to be cut in half, you know, and it might not be profitable at that point, especially if you have to refinance at such a high level, like a high level. So I think those are like the kinds of things that we need to somewhat worry about in the short term. But every indicator that I'm seeing is that we're headed toward massive deflation. And if we're headed towards massive deflation, that means the Fed will eventually come and have to cut rates. You know, you're looking at all the layoffs that are happening around the country, right? You're seeing all these businesses getting hit. You're seeing a lot of these debt maturities come along. So that's one of the things that's causing a lot of chaos in the regional banks, because the regional banks are holding on to all these loans, which if you mark to market are actually underwater, some of them.
What do you mean? What do you mean by mark to market?
Okay, so if you have a loan that's $100, like let's say I lent you $100, and I tell you that, hey, you know, you're going to give me 3% per year, right? So Amit pays me 3% a year. I gave him $100. Now, what if I can take that same money right now, go to the federal government and get 6%, right? The value of that loan that I gave you is a lot less now, because I'm essentially getting less return than I would if I did an alternative deal. So let's say right now I wanted to get my money back from you, but if me and you have a fixed contract of, you know, or a fixed term, I'm going to have to take a discount on that loan to get that money. So if I want to sell that loan to, let's say, Vitali's not going to give me $100 for that loan. He's going to tell me, no, Chris, I'll give you 70 cents on the dollar. So I'll only give you $70, and I get the obligation to collect 3% on that $100 from Amit. So now if you look at it, when you mark it, it's actually worth $78, that loan. So if I hold it and I don't say anything, that loan is worth $100. If let's say I try to sell it, the market is going to dictate you what it is, which is $70. So now if I am a bank, right, and if I truly mark my assets to what they're actually worth, they could be worth 30% less than what they had originated them for. So that's what's marked to market. Now, on the other hand, if let's say the federal government says, you know what, fuck it, we don't want to deal with this recession, we might end up going to depression, and they lower rates to 2%, right? Now the same asset that I have, which is that piece of paper, that loan, actually becomes more valuable, right? So now if I go to Vitali and says, look, I have this piece of paper that says Amit is going to be paying me 3%, and you can just go into the market and get 2%. That means that if you mark to market, it's actually worth more. So it's probably worth, like, let's say $110 that specific loan. So you see how
Chris,
it works.
That was incredibly interesting. Kelly is yawning, but I was actually listening to everything you said.
I wanted to finish the Enphase thing before we get to Weight Watchers.
Very interesting. I never knew what mark to market said.
Yeah, thank you. That was a good explanation, Chris.
That was awesome.
And like I said, before we get to Weight Watchers, let me just conclude this point. This final thing.
No, that was actually really good, because I've heard on the Olin podcast, they like Chamath always says mark to market. Every time he says, I'm like, what the fuck is he talking about? Mark to market. I have no ideas. Like, that was great. That was awesome.
The thing is, like, the reporting requirements for mark to market are very vague. They're very vague. So it's like do you if you look at your balance sheet, do you declare what the actual value of that asset is? You don't know, because if it's illiquid, you just mark it as whatever
Right.
the price that you had it for, because you're not selling it, you're just holding on to it. So you're not marking it down. That's all.
Right. When it goes on the actual market, it changes in value because now there's people bidding on it. All right. So let me finish before I go to the Excel again, just to wrap it up. And questions, if you guys have questions, please put it in. I think
yes, and before you start, Vitaly, we just hit 300. Every time we hit 300, I'm gonna go. We hit 300.
Can you do it when we hit 400 as opposed to 300?
Like save that shit for 400. Okay, continue.
Yeah,
go ahead.
Save it. The network is also. We keep talking about networks and monopolies, and like we talk about the microinverter like it's important. Of course, it's an important piece of technology, but this is not why you're buying Enphase, because there's another microinverter technology in China that sells microinverters, right? Because if you just want the cheapest microinverter, you should just go buy a Chinese knockoff of an Enphase microinverter, and I'm sure they exist. But you buy the network. When Enphase supports its product, it supports it for 25 years. Like I can call up right now and reach somebody within a minute. Well, maybe it's past calling time, but you know what I'm saying. During open hours, in like within a minute or two, I'll have them on the phone. If something is wrong on my system, if my own installer is gone out of business, won't pick up my call, Enphase will handle it. They'll get somebody else to do it. So you're buying the network when you're buying someone like Enphase. They have like the best industry service, and they talk about it in every call that they're the guys there behind the product.
And no one's matching them on the service section.
No one's matching it. In fact, SolarEdge has similar warranties, but their main inverter goes for 12 years. You have to pay extra to get the 25-year warranty on their main inverter, the one that can go down and catastrophe strikes and your whole system is down. Enphase's inverters are just 25-year warranty out of the box. Okay, so if you want to match Enphase's warranty on the inverter that SolarEdge has, you're gonna have to pay for that privilege. Okay, but even if you pay for it, what's the point? Because now your system's becoming more expensive. You're trying to save money. Now you're just going back to just use microinverters, right? So anyway, so let me go back to the spreadsheet and just finish up last thing just to make everybody.
Yeah, you guys can leave your questions in the chat right after this. We'll do questions.
Make everybody go crazy bullish like I am, I guess. I'm gonna show something at the end, but first, this is like silly projections which don't have to work out. But I'm assuming Enphase's growth slows down and 30%, 25, 25, 20, 20. You guys can, once again, do your own numbers, figure out your own thing. But even if it slows down, and even if I change these numbers, we're going currently from 15 million in 2022 microinverters per year. I don't see how eventually we don't get up to 100 million microinverters a year.
Wow.
Assuming they follow this growth. They don't have to follow this growth. Maybe it's slower. Maybe it's 80 million microinverters a year by 2030. Okay. That's a long time to wait, right? Why would I wait this long? But look where the cash goes, the revenue. And not everything here is accurate, so I don't want you to pay attention to everything. But revenue here is accurate up to a certain point. 2022, $2.3 billion, starting all the way in 2017 at 286 million to 2 billion. That would have been a nice 10x for anybody who was part of that, right? Just in revenue. Now, if we look at what happens when you sell 100 million microinverters, you go from 2 billion to around 15 billion. Okay. That's just
so Vitaly, one thing, just make sure you clarify to everyone.
Yeah. When
you say microinverter, it's not one microinverter per set. It's actually per panel. That's or panel. For every two.
You buy. I'm talking about one microinverter, and I actually did some further math on our Discord. If you guys join, I don't remember all of it, maybe offhand, but what happens when there's more solar adoption? I was like just doing simple math. So let's say most houses have around 20 microinverters, right? You project it out. How do you reach 100 million? How many houses is that? So I projected that's around 5 million houses or so. You realize there's 82 million single family homes, not counting like businesses, not counting multifamily, just in America, just United States, there's 82 million single family homes that don't have solar. Okay. And what happens when 5 million of them per year want solar? Well, Enphase sells 100 million microinverters. That's what happens. Okay. That's the United States. I'm giving you this is a crazy case that to think about the whole world of this going on. And Enphase will not control 100% of this market. That's obvious. But what happens if they have half of it? What happens if they have 30, 40% of it, of this massive market? Okay. The last thing I'll show before we move on, and maybe I take some questions. Here you go. I wanted to show some charts. Some of this is estimated here. Inverter growth. This is quarterly, I believe. So this is all accurate up until 2020. Then it becomes estimates of 2023. Yes. Somewhere here it's estimates. And I plotted it. I put an exponential to it that sort of matched the trajectory. I have an R squared value. If you guys know a little bit of statistics, This is a pretty good R squared value. I'm not saying that it's going to last, but we are at 0.95. 1 is perfect. So if we last here, 2030 is going to be a massive year for Enphase, because right now we are here. Can you guys see this? Right now we are here. What happens when we are here if solar is not a fad like some people think? And this was just a quarterly over year growth. This is what's going on right now with Enphase. Even in their bad year, this is their bad year, by the way, 2023. This is their bad year. Just look at this. Okay.
What's their margin per inverter?
46%, I believe.
Yeah, and I think they sell the inverters like, I think retail is like $138. They vary depending what inverter you get. But I think the installers get it for around $100 or so, so cheaper. But yes, their margins are around at 42 to 45% gross margins.
What does the market cap look like in 2030 if we sell 118 million?
I don't know if I did that yet, so I'll stay away from that for a second. I think I have it somewhere, but it's not worth going into everything right now. And I will have a full episode with Carlos on the channel.
On Freelance Finance. Yeah, and I put the Discord in the chat so you guys can join their Discord and check out the Enphase chat inside of the Discord.
So my case is not. Some people like to follow all the, like you could look at the 10Q, all the thing, but no, I'm looking at one thing: the inverters. Forget about the batteries, forget about the chargers they're doing, forget about the vertical integration with energy. If they can just keep the inverter business, just like Tesla, if they can keep the car business and grow the others, of course, we have a massive upside here.
So short-term price you still think is around 130-ish. It could dip to that.
130 is when I'm buying super heavy. 110. I've already been buying, by the way. So there was a question: when is he converting his dividend? I've started converting stocks already. So am I going ballistic right now? I always want it under 150. That's what I've always wanted. So 133, 135. My next buy is 147. Then it's 137 and whatever. I have multiple buys all the way down.
Okay.
And then 110.
What's the forward PE on this one?
I think it's 40 right now, somewhere around there.
Okay.
So yeah, it could totally be stagnant. And if you look at Enphase's growth, I didn't go deeper into those numbers. They stagnate for periods. They have quarters which are worse than previous quarters. And I've averaged 5 years of quarters. So when I get that 2% number for quarter two, that's over 5 years of quarters happening in quarter two that are usually low. Okay. Enphase's growth in quarter two and quarter one has usually sucked. All their growth comes in quarter three and quarter four after the summer months, I guess. So if this continues, even at a smaller rate or even stagnation, I don't see as much downside as everybody else sees.
Okay, some questions. Ford reported negative 100% margin on their EVs. Earnings were not the best for Ford. I don't know if you guys got a chance to dive deep into it, but it seems like they're kind of screwed, which is what I got from earnings. I don't know.
By the way, just to highlight one thing, insiders are starting to buy shares again. I just saw a transaction come through May 2nd, which is today, from Enphase. 3,500 shares. VP CFO just bought shares.
Yes.
Rogers have been buying shares, which is good. But
Rogers spent $5 million. How much did the CFO spend? He also spent a pretty penny on buying shares.
About $500,000.
These guys, they eat their own dog food.
Yeah. And the guy's been, so let me just share my screen. So he's been doing a lot of selling in the 300s, but he started buying in the 150s. So let me just look.
In conclusion on Ford, their EV business.
In conclusion,
that's the summary on Ford.
Why don't we do that tomorrow with Carlos? Yeah. Cover the.
Oh yeah, Carlos would love to shit on Ford. Yeah, we'll talk about it.
Yeah, he wants to shit on Ford for a little bit.
So you can see here the VP of which is the chief financial officer. He ended up buying 3,500 shares. My guess is that he'll probably do exactly what he did with the selling side. He'll do in the buying side, which is he'll slowly dollar cost average in. I mean, he's got the money, he's got the capital. Right. So, same thing with TJ Rogers, who's like, he
bought 33,000 shares a week ago at 166.
Yeah, I mean, TJ Rogers is a billionaire, so he's got the money. So you can see nonstop selling before, but now you're starting to see some green candles on the buying side, which is not bad. Which is whenever I see this is one of those things that I love to see when insiders start buying some goddamn shares, because that's when I know that some valuations are a little better. And insiders, what's the saying? There's a lot of reasons why people sell, but there's only one reason why people buy. So
have you noticed big tech CEOs like barely buy back their shares?
Yeah.
Like Andy Jassy, Zucks.
I don't think they need to. Their companies are too big and they get too many options. It's just not. It's not cost effective for them.
Yeah, the other thing for them is that they have so many shares already. If they really need money, they just borrow against the shares. That's what everyone does, because it's cheaper that way than trying to use capital to buy shares and then sell them and pay taxes again and everything else. Like Buffett, you think Buffett ever fucking does that? No, Buffett always just he lives on debt that he can accumulate using his original shares as collateral, and banks will lend to.
Oh, speaking of SoFi, okay. All right, I want to ask you guys a question.
Shouldn't we cover this tomorrow?
No. It's a simple question. The $5 January 2025 leaps are under $2 right now. Is it? I know how you guys feel about SoFi. Is that not at all, as my camera dies, attractive to buy leap calls for
ChatGPT just answered your question by shutting you down.
I would just buy the stock. If you're just buy the fucking stock, like, dude, if you're gonna pay a $2 premium, which is half the value of the equity, but you have time, what is that thing called?
Time decay.
Time decay. You're better off just buying the stock.
Okay, no, but here's the question. It might be a naive question, but let's say SoFi goes to $15 by 2025. Would it have been better to own the stock?
It would have been better to own the options.
So when is the option, right?
The options. And I'm not saying don't. Actually, I would be different than Chris. I would say buy a bunch of shares that you can hold for a decade, because you don't know in 2 years if it's going to go up.
Right.
And then buy some calls, like you're saying, that are cheaper. But I wouldn't load up on calls and have no shares, because this is a company that can take 5 years to get to where you want. And you would have lost out on, unless you're willing to keep re-upping on the options. Every 2 years, you just re-up on the options. That's possible too. And some Tesla folk did that for like a decade. So if you do that might work out too.
Yeah, I'm not about that theta decay life, bro. I'm not gonna do it.
Yeah,
especially on something that's speculative.
I try to buy options on things that are not speculative. So Amazon, I have some options. Google, I have some options. We talk about Enphase. I don't have options yet, but at the 130, I have enough shares. I'm actually just thinking of buying options. So I have.
What was the strike price on your cash secured puts? That was 200, I think, a while ago.
I had one at 200. They paid me $50.
Right.
So under 150, I'm underwater on the option.
Right.
Which I doubt I'll even get it, because it's 2025.
It's so long from now.
The person is probably using me as a hedge in case Enphase just doesn't go anywhere. So I doubt I'll get those shares. And if I did, I get them for 150, which is fine with me.
Which is fine, yeah.
And all my other options are around 150 to 130 with $30 or $40 paid in premium, which means my share price drops to between 1 to 110 to 120, somewhere in that range, which I would buy them again. So I always I sell those puts, because those are the prices I'm willing to buy at. You follow me? Correct. But now I didn't buy any calls. I wasn't buying any calls when Enphase was $200 plus. That was ridiculous, super expensive. But as it falls to 130, 110, all of a sudden the calls become like $30. And 2-year option on Enphase, it's $130 stock, $120 stock, $30 to pay for a call, a quarter of the amount roughly. That makes sense to me, where I have enough shares. I don't have to worry about that. The options will probably play a big role, because I'll be honest, I haven't lost any money on Enphase options at all, ever.
No.
Because Enphase is a very volatile stock and it trades right now in a range. So I don't know. You guys can think it's going to $20. I think $100 seems like to be the bottom.
I don't think it's it's starting to get to my valuation that I thought it was attractive.
That's a question for you. Aren't you buying it right now? 150 is your call. Yeah, 150 is your.
It's not under 150, but yeah,
I mean, that could be tomorrow.
Yeah,
that could be tomorrow.
Yeah. So that's the target that I have. That now, if I see it below 150, I may start adding to a position for it. But I'm probably going to hold back based on your conversation that you just had, which is that they might have some down quarters the next couple of quarters, and so it might be worth waiting a little bit until the market flips, and then buying before the market realizes that this is going to be a great growth story going forward. My biggest thing right now is just watching the Fed. I need the Fed to pivot. Like a lot of businesses, the minute the Fed starts to pivot, I think we head into a recession, because that's typically what happens. Fed pivots, we head into a recession, shit goes down. A lot of businesses, they go downhill. The companies that are very strong, they end up being able to capitalize on that cheaper credit and buying them up, consolidating and becoming stronger. And boom, there you go. There's another bull market that comes our way. So I would say right now I'm just waiting to see what the Fed does. I think that the next
Kane says it's not going to cut till next year. You think they cut this year or next year?
So I'm not a crystal, I don't have a crystal ball, so I can't tell 100%, but based on the inflation rate that I'm looking at, which is declining very fast, we're likely to see a 0.25 raise just to be on the cautious side from the Fed. But I think we see a pause, which essentially means we're pivoting. I know some people have a different, like you can ask people like, what is your definition of a pivot? Is it that they start cutting rates? Is that your definition of a pivot? Or is it just when they pause? To me, a pivot is they're pausing, because that means that they're changing their rate rising regime. So I think we head into a recession in Q2, late Q2, early Q3. There's going to be some carnage in some of the sectors, especially like the regional banks. The regional banks are all tanking like today. Some of them are going to have to consolidate. They might have to be rescued by the Fed, believe it or not. And after that, we might see some stronger quarters come our way after Q4 of 2023, and 2024 being an election year. It's probably a year that people don't want to really mess around with the economy so much, right? So I think 24 will be a good year. So I'm going to be looking for a lot of great deals in the summer and fall of 2023 and seeing if I can capitalize on that. And so once recession really hits, businesses start going down. It's like a super cycle of deflation that happens. People lose their jobs, which means they lose their homes, which means they lose their ability to get premium pricing. Now they feel poor, so they spend less. And then it's just a cycle of down, down, down. So a lot of the market is more about human psychology than it is about actual physical numbers. So human psychology right now is just getting everyone ready to be a lot more conservative with their spending. We've had nothing but spend for the last 2 years because everyone was getting stimulus, everyone's getting cheap loans. This is the first time in a long time I think people are going to see negative equity in their real assets, and that's going to be bad, because that means that if you feel like your house is worth less than what you paid for it, because that's the thing that I'm worried about, by the way. If you got a house in the last 2 years because you FOMO'd in, you're like, oh, I'll never be able to afford a house. For some reason, you got like a 6% interest rate on that home. What's going to happen is interest rates will go down, and the prices of homes, you would think that as interest rates go down, would go up, right? That's the formula that you would normally go by. But I'm going to take the other side of that in saying that there's been a lot of pent-up demand with people wanting to sell homes, but they don't have the ability to do that because they have such a great rate at 3% when they bought the home, that now if they go buy another home, it's going to cost them 6%. So as interest rates go down, I think the number of houses on the market is going to skyrocket, because now people are going to say, look, I want to get out of this house and I want to either buy a new house or I want to downsize. All the boomers are getting older. They want to get out of these houses. So I think as interest rates go down, you're going to see a flood of new homes and new inventory come on the market, which is counterintuitive to what the narrative generally is, that interest rates, when they go down, the value of assets go up. I think when interest rates go down, the value of assets are going to go down with them. So, yeah.
I think
a lot of people bought those houses at 6% interest rates. Yeah.
Yeah. I still don't believe this narrative, Chris. You're waiting some real estate catastrophic event, and now you're pushing it to when the rates are going down. Okay. Now,
yeah.
Yeah,
like I said, it's a theory. It's a theory,
Okay.
How
are you playing this theory?
So SLG, baby.
Weight Watchers.
Weight Watchers.
Yeah. Hey, listen, Weight Watchers is going to do very well, man.
I'm telling you, real estate theory through Weight Watchers.
You're already up significantly on it.
All right, can we answer some questions before we get to Weight Watchers?
When it was $4, bro. I mean, their earnings is.
We have an episode on Saturdays. You can join us with Chris talking about Weight Watchers all day. Okay.
That's funny. Look at what Kelly said. Chris is right about a lot, which pisses me off. Yeah, it happens.
Kelly said that? Yeah. Well, Kelly will be on the pod Thursday, so she can talk all about
Looking forward to seeing you in person, Kelly, or virtually.
Yo, that's gonna be awkward when you talk to her for the first time. It's gonna be.
I don't think so. I don't get awkward around women anymore. That was in my 20s.
Jay Kim says Chris is talking his book. He wants to buy a house. Yes, I do want to buy a house, but I own multiple properties right now, so I'm not.
What a flex! What a flex!
Boom, boom, boom.
Yeah, no, I'm just saying, like, I'm not benefiting by having this theory. Like, oh my God, like if prices of homes go down, like I need a place to live too. I don't want my property to go down.
Yeah, but you ain't moving anywhere really, so you're fine.
Yeah.
Okay. Any quick thoughts on Zscaler or D-Dog?
I don't really track them.
Yeah,
I track Datadog a little bit. I haven't done more DD on it since their last earnings. So I'll get back to you guys on that one.
Thoughts on AMD earnings? I know we didn't talk about it. Stock was down like 3% out. It was a good earnings. It wasn't bad.
Yeah, but I think there's still a PC apocalypse happening, isn't there? So growth is slowing. They can't sell enough. People aren't buying in as many PCs and all that. So I think that's the whole story with AMD since day one.
So if I had to choose between AMD and Intel, believe it or not, I might actually choose Intel.
Intel was up after hours, and AMD was inverse.
Big shocker, Chris. You go for the value trap. Big shock.
No. The reason I would go for Intel.
His whole portfolio was like the worst of the worst. I have Intel. I have Weight
But
Watchers.
he performs. He puts up the numbers.
I don't have Intel right now. But one of the trends that I'm seeing is that a lot of companies, they're developing their own custom silicon, right? And so Intel is heavily investing in foundries for that specific purpose. So I think right now, if we want to look at it from the AI side, by Intel having the subsidized factories being built that are specifically towards contract manufacturing. And this is something that Pat Gelsinger said a couple of months ago. He's like, I don't care who. I will make chips for Intel. I mean, for AMD. If AMD wants me to make their chips so that we're making them for them, I'll do it. So
nice.
Pat Gelsinger is just he's a really good CEO.
He wants to be like Microsoft, just be everywhere.
Yeah. And I think there's still a lot of supply chain risk with Taiwan. With the Chinese are just
that shit's getting serious.
Yeah. So if imagine right now, the minute China, let's say, invades Taiwan, and I think it's going to happen in the next decade. I think something is going to happen geopolitically. Either they'll start off by just like having a blockade, like a naval blockade of Taiwan, and then the minute that happens, we need chips. Like our entire industry runs.
Yeah, and they can't just be Doritos, bro. We need some real fucking chips. You know what I mean?
Yeah, all military hardware, all electronics, everywhere. It's all chips, baby. So who's going to benefit? Intel.
So remember, I told you my bull case for Intel that in 2-3 years, when the factories are built, that this is $100 stock.
Yeah,
I still think that. I just don't think you have to rush into Intel right now. You have 2 years to buy Intel.
I agree. Yeah.
Apple earnings. I know that's on Thursday. Any quick thoughts we have on that? We think it's gonna be good or bad? If it's bad, S&P might be really bad.
Either way, Apple's going down. It's sell in May, go away, baby.
Apple's going down.
Apple's going down.
Yeah, Apple's going down. The valuation is stretched. The markets that they're operating are cutting back. I think they're hitting some saturation points, and also they're probably just gonna. They are the victim of their own success in the big numbers, right? So it's really hard to perform when you're selling so much shit, bro. Like, how do you keep getting more and more and more people to buy your shit? And the other thing is, like, see this phone right here? I'm telling you, this is an Apple 10, like an iPhone 10. It works just as good as an iPhone 6, like, what is it, 14 or 15 right now, right? I don't see the differentiating reason why anyone would want to replace.
I've used it since the 10. Now that it's the new one, there's no difference. It's barely faster.
It is a little bit more clear. I mean, Chris is from 2017. That one's a little bit less,
Chris. No, I gotta tell you, I'm not impressed with the actual, like, the technology is not increasing as fast as it should. And also, I just want to ask, do you have a lot of Palantir bots in the comments? Because
no,
they're just posting Palantir
stuff that cares about Palantir.
I'm just saying, this feels like a couple of bots here.
No, we talked about China, Taiwan, so people were saying, "Oh, that'll help Palantir." I didn't bring it up because I don't want to, bring it up.
Just making sure.
Guys, now, one thing is Apple did get $1 billion in deposits in 4 days on that savings account. So, I mean, maybe fintech in the world of mortgages and loans, buy now, pay later is their growth curve. Who knows?
It is. No, it is. It's even I like to use their I don't know what it is, but if you have the Apple Card, you don't have to pay for like a Mac for 24 months, 0%. There's no reason not to use it. Right? 0% for 24 months, sure. I don't care. Why would I pay you right away anyway if there's no dent to me? So obviously some people will not end up paying after 24 months and get hit with a massive bill, but like they have brilliant marketing for this kind of stuff. Absolutely useful.
Yeah, by the way, the Apple Card is not Apple running this off of their balance sheet. This is Goldman Sachs running their Marcus platform, I think, off of Apple. So this is nothing to do with Apple's balance sheet. Apple is probably like the middleman just getting fees. That's the one thing that I think Apple does. They are the gatekeeper and the toll booth of the fucking world, dude. Like we were just talking about this yesterday about Twitter. You know, every transaction, Apple is getting a 30% cut. And they don't even do anything. That's like the fuck.
Yeah. Like on the subscriptions, if you subscribe to someone for $5, Apple gets 30%. It's insane because you're using the payment infrastructure.
So we talked about this on our WhatsApp, but yes, I have some apps in the store, film apps, but every time there's a digital product that I sell, like anything digital, whatever, they take 30% of it, no matter what. So they take for the app, they take for every digital component of it. So they've been like feeding off of app developers for a long time.
Now, granted, I think they should take something because they provide all the traffic.
That's
but not
fine.
30.
In day one when this started and there was no store and there was nothing, that makes sense because we didn't know what everything cost. And having an actual physical item in a store, like an application, a box and all that is expensive. It's 50%, 50% split. But at this point, 30% for what? To store like a couple of megabytes on your hard drive? Are you serious? Like, no, that's a real ripoff. It should be something like 5-10%, and it's not. It's a tax on everybody, by the way, because then I, as a developer, actually raise up my prices to cover that 30%, which the user ends up paying anyway. So this is a tax on all of the internet.
I'm a consumer. Yep.
Yeah.
Kaiser says, I'm not a Palantir bot. I'm as real as emits bricks. That's what I'm talking about, baby.
Well, now we know you're a bot.
Okay, last thing I want to talk about real quick. Elon tweeted today, the more screen time users spend looking at a post, whether text, pic, or video, the more it's boosted. Video posted natively to this platform, not linked through YouTube, will be boosted more than an external link because way more time spent watching a video. Do you think this is convincing enough? He's basically saying, hey, the algorithm will reward videos. Do you think people will post?
Do you get paid for this if he posted? So
there's no advertising yet.
Yeah, he has to make it where you get some monetary benefit. And then, yes, he'll win in that. Absolutely.
I think unless Twitter has a videos tab, I for the life of you, I can't scroll down a feed where I'm in the mood of reading and then I see a 17-minute video and I click on it.
Right.
And there's no way. I just go back.
They're probably going to have that. They're probably going to have that.
Well, they got to get to that soon. That's easy to make. That takes like less than half an hour to just put some boxes on it.
Yeah, but the creators also need, I think, a reason to be posting there. They need to have some sort of compensation for it, right?
Correct.
Otherwise, I just keep driving people to YouTube. Here's my YouTube link. Go there.
Correct.
Yeah. And also, why would we want to sacrifice something that pays us for something that doesn't?
Correct.
So, like, let's say we were able to post a video on YouTube, and why would I put it on Twitter and then people end up just watching it on Twitter, and now I don't have any monetization on the YouTube side?
You know. Guys, I forgot the Lakers are on.
Okay, so Corey is a real fan. Read that.
I forgot the Lakers are, and they're up on the Warriors. Wow.
Well, honestly, if you're watching an actual game and us, oh my God, we have made it.
Yo, Corey, Corey, shout out to you, man. Yo, we should do like a daily MVP type of segment or something at the start of every pod. We got to bring that back.
Oh God,
you mean like a daily user?
We eat like a daily. We got to come up with. All right. Under this pod, please leave some segment ideas, whether it's like user of the day, comment of the day, daily MVP, something fun. Just while we're doing small talk for the first 5-10 minutes, it'll be fun to bring it up there.
The only instructions you have to listen to is just go to our Twitter and subscribe. Okay, that's it. Forget about leaving any segments.
I'll tell you who the daily MVP is. Carlos's daughter, bro. She's so cute,
she great.
Man. She's definitely the MVP today.
All right, cool.
Vitaly, you got to pimp out your kids a little bit on the pod as well, bro. You got to.
I did. Didn't I bring him on once? I put him on a couple of times.
That was on the Enphase one. You got to bring him here, and we got to ask him questions about life. That kid knows a lot about life at his young age from the videos I've seen. So
he's a smart one. Yeah,
you're doing a good job as a dad. You know, you're raising him up.
Thank you. Okay. I'm doing all the work. Producer wife is not doing anything.
Saw that video. Oh man, Amit likes little kids, of course, Namir. Of course.
Oh God.
All right, 294 people here. Thank you so much. It means the absolute world spending your Tuesday night with us. We'll be back tomorrow, and we'll discuss forward in depth with Carlos, and we'll see what else we have to talk about. Whatever.
The Fed. We got to talk about
the Federal Reserve, Jerome Powell, what he did. And yeah, that's it. Please follow the Twitters in the description, Discords in the description.
Let me update. How did the 3D printing thing go? Okay, so I printed a bunch of stuff for my kids. It's something called TREPS. It's entrepreneurs. Kids are learning how to do small businesses. He sold out. So he made $120 selling out the 3D printed stuff that we made.
No, but what did you print?
A couple of these guys. So this is using TPU, and it's to hold pencils.
Ah,
dude, that's awesome.
Well, there's other things too, like little plant holders and a bunch
of the unit economics on it and the margins.
So this cost me 25 cents to make, and he sold it for like $5, something like that.
He sold it for $5,
and that was cheap. He could have probably got it more, but anyway, he sold out completely. Every piece is gone. $120, $30. He had like 15, 20 pieces or something around there. All of it gone.
And he had to market it to fellow kids, right? He had to like.
Well, it was like an event, so all the parents come, and they obviously supporting the kids too. It's not just like
Right.
But yeah, he sold out pretty fast, especially the plant holders.
So at the event, we know you're cheap ass to not buy anything because you were saving up for Enphase shares. So you didn't support any kids, I'm assuming.
No, we supported some kids.
Looking at the, like $5, that's almost like a Enphase.
Yeah. Okay, so if anybody wants to order one, since we make no money on this podcast, I will produce.
Oh, hold on, I need to pump this. I need to pump this real quick. Someone buy a damn hoodie from midislegit.com. I forgot I have this website, and Shopify charges me $40 a month. And I'm like, holy shit, I'm losing $40 a month on this. So someone please buy a hoodie on midislegit.com.
It's beautiful.
And cover my Shopify fee for the month. That's awesome. That's so cool, man.
All right, anyway. All right, thanks everybody. Appreciate it.
Thank you guys. We'll see you tomorrow. Good night. Have a good one.
Later, guys.